Hey everyone, and welcome back. We're diving into a topic today that, well, let's face it, kind of affects all of us.
Yeah, pretty much anyone who uses money, right?
Exactly. We're talking money rates.
Sounds exciting, right?
Well, it is.
Yeah.
Maybe not like in a jump up and down way, but
It's important stuff, though.
it really is. It's kind of like the engine under the hood of our financial lives.
I like that.
So to get this deep dive rolling, we've got a ton of research, lined up articles, expert opinions, even some personal experiences to share.
All to help you understand what these rates really mean, in a way that actually makes sense.
Right, because let's be honest, sometimes all those financial terms can feel like a whole other language.
Definitely. It's like deciphering hieroglyphics.
Exactly. So let's break it down. The source material mentions a whole bunch of different money rates.
Interest rates, exchange rates, inflation rates.
Yeah, it can feel overwhelming.
It's a lot to keep track of.
So where do we even begin? Like, what are we actually talking about when we say money rates?
Well, at its core, a money rate is basically a way to measure the value of money.
Okay, so like how much your money is actually worth.
Right. And this value, it can change over time,
Yeah.
That's why we have all these different types of rates, each one giving us a different piece of the puzzle.
Okay, so it's not just one big money rate that rules them all.
Nope. It's more like a family of rates, all connected in different ways.
Gotcha. So let's start with one that I think most people have at least heard of. Interest rates.
Yeah, interest rates, those are pretty fundamental.
They're everywhere. Mortgages, credit cards, savings accounts.
Basically, anytime you borrow or lend money, you're dealing with interest rates.
So it's like the cost of using someone else's money.
Or the reward for letting someone else use yours.
Okay, that makes sense. So like with my savings account, the interest rate determines how much my money grows right.
Exactly. Higher interest rate, more money you earn.
But then I also hear about things like deposit rates. Are those the same thing?
They're similar, but there can be some subtle differences.
Okay, like what?
Well, deposit rates usually refer to the interest you earn on money you've deposited for a specific amount of time.
Like a fixed term.
Exactly. Like a certificate of deposit or a CD. Those usually have a set interest rate for the whole term.
So you know exactly what you're getting.
Right. Whereas savings rates, those can fluctuate a bit more.
So potentially more earning power, but maybe a bit more risk.
Exactly. It's all about weighing your options and your comfort level.
Makes sense. Okay, so we've got interest rates and deposit rates. What else is in this money rate family?
Well, how about we jump over to a rate that's particularly relevant for travelers?
Ooh, you mean exchange rates.
You got it. Exchange rates basically tell you how much one currency is worth compared to another.
Ah, so that explains why my trip to Italy felt a little pricey.
Those delicious pizzas and cappuccinos probably cost a bit more than you expected, huh?
Let's just say my souvenirs ended up costing a small fortune.
That's the exchange rate at work.
So the stronger the US dollar is against the euro, for example, the less those Italian goodies cost me.
Exactly. And vice versa, of course.
Yeah.
So yeah, exchange rate's definitely something to keep an eye on if you're planning any international adventures.
Speaking of things that can impact our wallets, let's talk about a big one. Inflation.
Ah, yes. The rate at which prices increase over time.
And our sources really emphasize how important it is to understand inflation in the context of money rates.
Absolutely. Because inflation can really eat away at your purchasing power.
Meaning the same amount of money buys you less stuff.
Exactly. Imagine you always buy the same brand of coffee.
Ugh.
Last year it cost you $10 a bag. But now, because of inflation, that same bag costs $12.
Ouch. So even though I'm still handing over the same amount of cash.
Your money is actually buying you less coffee than it did before.
That's a bummer. So wait, if interest rates are what I earn on my savings and inflation is how much prices are going up? Does that mean if inflation is higher than my interest rate?
You're actually losing money by keeping it in savings.
Bingo.
You're getting it.
Yeah.
It's crucial to understand the relationship between inflation and interest rates.
Okay, so ideally you want your savings to be growing at a rate that's higher than inflation.
That way, your money is actually keeping up with the rising cost of goods and services.
Makes total sense. Okay, so we've covered interest rates, deposit rates, exchange rates, and inflation. What other money rate mysteries are we going to unravel today?
Well, how about we delve into the exciting world of investments?
Ooh, investment return rates. Those sound a bit more complex.
They can be, but they're also incredibly important.
So what are we talking about here?
Investment returns are basically gains or losses you make on your investments.
Okay, so unlike a savings account where the interest rate is usually pretty predictable.
With investments, those returns can fluctuate a lot.
Makes sense. So what factors influence those returns?
Well, a lot of things, actually. The type of investment you choose.
Stocks, bonds, real estate.
Exactly. And then there's market conditions.
Like if the stock market is doing well or not.
Right. And of course, you guessed it, those money rates we've been talking about.
So it all ties back together.
It's all connected.
I'm starting to see the bigger picture here. But I gotta say, our source material dives into some pretty complex stuff when it talks about what influences these money rates.
Yeah, there are a lot of moving parts.
They mention things like central bank policies, market dynamics, even things like GDP growth and unemployment.
That's a whole ecosystem.
Okay, so help me understand this. How do all these pieces fit together?
Okay, so imagine central banks like the Federal Reserve here in the U.S.
Yeah.
They're kind of like the conductors of this whole financial orchestra.
I love that analogy. But how do they actually wield that baton? What tools do they have to influence these rates?
Well, one of their main tools is setting something called the federal funds rate.
Okay, what's that?
It's basically the interest rate that banks charge each other for overnight loans.
Oh, okay.
And this rate, it has a ripple effect throughout the entire financial system.
So it influences things like mortgage rates and credit card interest.
Exactly. It's a chain reaction.
Got it. But our source also mentions market forces like supply and demand.
Ah, yes, the invisible hand of the market.
How do those play into all of this?
Well, just like with any product or service, the price of money is influenced by how much people want to borrow it.
The demand,
Right. And how much lenders are willing to lend it out.
the supply,
Exactly. So if a lot of people want to take out loans, demand is high.
and interest rates go up.
You got it. It's like an auction. The more bidders there are, the higher the price goes.
Ah, that makes sense.
Yeah.
Okay, and what about those economic indicators like GDP and unemployment? How do they fit into the picture?
Those are key signals of an economy's overall health.
So like a strong economy means higher interest rates.
Often, yes. Strong GDP growth and low unemployment usually signal that the economy is doing well.
So lenders feel more confident about loaning out money.
Exactly. And borrowers are more willing to take on debt.
But if the economy is weak,
Then interest rates might be lower.
to try and encourage people to borrow and spend more.
Precisely. It's all about trying to find that balance.
Wow, it really is like a giant interconnected puzzle. So with all this in mind, what does this all mean for me, the average person just trying to manage my money?
Well, the key takeaway here is that understanding money rates can really empower you.
To make smarter financial decisions.
Exactly. For example, if you're thinking about buying a house and you see that interest rates are starting to climb.
It might be a good idea to act sooner rather than later.
Right. Before those rates go even higher.
So it's all about timing and strategy.
Absolutely.
Are there any other practical tips you can share? Like how can we actually use this knowledge to our advantage?
Well, for borrowers, shopping around for the best rates is crucial.
Don't just settle for the first offer you get.
Exactly. Do your research, compare rates from different lenders?
You could save yourself a lot of money in the long run,
You really could. And on the savings side, look for high yield accounts.
especially when interest rates are rising.
That's right. You want to make sure your money is growing as much as possible.
And what about navigating the investment world? It seems like that's where things can get really complicated.
It definitely can be, but there's some key things to keep in mind.
Like what?
Well, diversification is essential.
Don't put all your eggs in one basket.
Exactly. Spread your investments across different asset classes.
Stocks, bonds, real estate.
That way, if one area of the market isn't doing so well, you're not as exposed to the risk.
Makes sense. And remember how we talked about inflation earlier?
Right.
Well, that can also impact your investments.
Absolutely. Inflation can erode the value of your investments over time.
So how do you protect yourself from that?
One strategy is to consider assets that have historically outpaced inflation.
Like real estate or commodities.
Exactly. Those can help safeguard your portfolio.
So it's all about being strategic and staying informed.
And luckily, there are tools out there that can help.
Our source mentions financial calculators.
Yeah, those can be super helpful.
What do they do?
Well, they can help you see how different interest rates could affect things like your loan payments or your investment growth.
So you can get a personalized picture of how money rates are impacting your own finances.
Exactly.
Awesome. Well, I got to say, this has been a seriously informative deep dive.
We've covered a lot of ground.
We've explored all sorts of money rates and how they impact our lives. And we've even learned some smart strategies to make this knowledge work for us.
Hopefully you're feeling a bit more confident about navigating the world of money rates now.
Absolutely. But before we wrap things up, I want to leave our listeners with something to think about.
Take a shoot.
We've learned that the world of money rates is constantly evolving, right?
Oh, yeah, for sure. It's dynamic.
New technologies, global events, even things like climate change are all going to influence how these rates function in the future.
It's an exciting time to be following this stuff. There's always something new to learn.
That's a great point. It's not a learn it once and you're done kind of deal. So stay curious and keep exploring. Well, that's all the time we have for today's deep dive into the fascinating and sometimes perplexing world of money rates.
It's been a pleasure diving in with you.
Thanks for joining us. We hope you feel equipped to navigate your financial journey with more confidence and understanding. And until next time, happy investing.
Happy investing.
And saving. And borrowing. Basically happy everything related to money.
You got it.